Non-interest finance in Nigeria has grown from a niche offering to a steadily rising alternative in our financial landscape. From banking to investments and insurance, it's shaping a more ethical, inclusive approach to how we manage our money. But how far have we really come? Hello and welcome to Islamic Finance Weekly. I am Rahma Say Muhammad to share insights on the progress so far, the challenges ahead, and the innovations that can help expand the frontiers of non-interest finance in Nigeria. We welcome to the program Dr. Basheer Oshodi, President NIFIAN, that's the Non-Interest Finance Institution Association of Nigeria, and the Chief Executive Officer of Trust Arthur. Welcome to the show, Dr. Basheer.
Thank you very much, Rama. Thanks.
Thank you once again for joining us. So we delve right into the conversation of today. Yeah, Trust Author is one of the emerging players in Nigeria's non-interest finance space. From your perspective, how would you describe the current state of non-interest finance in Nigeria? Is the growth trajectory encouraging, or are we still scratching the surface?
Okay, thank you very much, Rahma. So non-interest finance in Nigeria started in 2012, thereabouts, or they just 2011. That was when the first two, the first two financial institutions got their license. With just two players in the market and one asset management company at that time. Of course, with limited regulation. It meant that it started rather slowly. What we have right now, as of today, is that the asset size and the sukuk put together is going to be hitting 6 trillion before the end of this year, right? From very little, from nothing really, right? Because the bank had a regional license, and the other bank that was involved had the window license, right? And so those couldn't give the result. And of course, with the regional banks, of course, more were licensed. The regional banks are becoming standalone banks, and the windows are becoming full-fledged banks, right? So what that means is that they're able to deal in bigger deals, bigger transactions, right? So as of today, the size is almost 5 billion already, 5 trillion, sorry, 5 trillion naira. And by the end of this year, it's believed that it's going to hit 6 trillion. Now, if you look at it critically, sukuk alone is accounting for 53.9% of the market, right? And while Islamic banking assets is accounting for 45.2%. I mean, at the end of the day, we're expecting growth of about, or we're envisaging or experiencing growth of about 110%, right? Which is not bad at all. In the global space, the growth is also not bad, but we're seeing about 15, 20%, right? So growth in Nigeria is sharper than what you have in the global space, right? And I must also confess that the growth in Nigeria is even faster than other African countries, right? So we're leading the bulk of Africa right now, right? As at May 2022, for example, right, we had assets of barely 2% of the total banking assets. Now it's still plus or minus the same thing, right? And then now we've got about 2.7 trillion in terms of assets. I'm not going to mention the name of the banks. The Takafu segment is still a bit low, barely at 15 billion, right? So if you look at the milestones that we've achieved, again, sukuk has been fantastic. Again, because of federal government sukuk that's being released almost every year, thereabout, right? And so we think strongly that the debt market is also going to rise aggressively because they're having more Islamic banks coming to the market, or more non-interest banks. Now, I mean, amazingly, a lot of states have started showing interest in sukuk market. I mean, Lagos took the lead. A lot of other states, like, of course, Osun took the lead first. Then Lagos is doing very well. Kaduna, Katsina, Gombe, Abia, and of course, very soon, very, very soon, there's a major conference on how local governments in Nigeria can benefit from the sukuk market. That conference is coming, I think, next month, championed by the key actors in the market, from the regulatory side and, of course, from the market side. And then we're going to be seeing something beyond just states and corporate sukuk or federal government sukuk. We're going to be going deep into, the smaller areas. And of course, I must confess also, the regulators have been fantastic. They've been one of the major drivers of growth. The central bank, Securities and Exchange Commission, NICOM, PENCOM, of course, DMO, FIRS, in terms of tax neutrality, they've done a lot of work. They've created lovely investors' appetite in the market. They've helped with financial inclusion. Of course, now with ESG and green finance, you can see a lot of good things happening there. Yes, when it comes to finance, of course, in the beginning, there'll be challenges for any business at all. Challenges of early growth. Nobody understands where Mudaraba is or Wakala. That was talking about. So there's like awareness gap that we also need to fill. We don't have a lot of products yet. We don't have sophisticated products yet. I mean, I was speaking with some guys from one of the African countries just last week, and they're like, they don't even have capital markets. I'm like, oh my goodness. So it's good that we have all of these things, and but we can still build on them can build on them further. We can come up with unique derivatives that are compliant. We still have problems around liquidity management instruments. Again, I know there are some three instruments in central bank. Are they being used? That's the next question. And if not, why? And that's the question we need to try and address. Of course, talent gap. I mean, just a few people know about Islamic finance. It then means that people have to come into conventional finance, into non-interest finance. So they're going to come with a mindset of conventional finance. So it's going to take a bit of time. I think our technology is not fantastic yet. It's not bad. It's not bad. It can be more sophisticated. I mean, it can be a true fintech, right? And so when you start to look at the overall growth trajectory, now we think we're expanding at least beyond global average, right? And just a matter of time, we're going to compete very well with Western Europe, particularly.
Interesting. Thank you so much for that, Dr. Basheer. So let's talk about, the awareness gap. From our recent Vox Pop, it is clear that many Nigerians don't fully understand what non-interest finance is or still associate it with religion. What do you think is responsible for this awareness gap, and how can institutions like Trust Arthur help bridge this?
Like I tell people, if you're used to banking services, you walk into a bank, you want to bring in spare parts, from wherever into Nigeria. You're already in business. Because you're in business, the bank offers you interest rate or whatever, 33%. You don't like it, and you start to look for options because you're already doing business. You've been doing it for 20 years or 30 years or 5 years or whatever. You can then start to look at other options. Who can give me a better rate? Or who can give me a structure that reduces overall risk or that benefits me better? But that's when you're in business. When you're not in business, you don't even know about anything. You don't even have an account. And if you have an account, you're not doing anything with it. And so we have found out that financial inclusion research shows that more people are using accounts, but practically they're not getting any benefits, so they dump their accounts, right? But so for those that are in business or those that do LC transaction, letter of credit, those that do structured transactions, those that do real estate, they're already in business. So it's easy for them to shop around for the best deal, right? And so those that are in business know about Islamic finance. It doesn't matter what part of the country they're from. It doesn't matter what religion they practice. It doesn't matter what ethnic group or anything. It doesn't matter as long as you're already in business. Those that don't know about Islamic finance or non-interest finance are those that are financially literate.
Right.
They're literate because they're literate. They're like, okay, what's happening here? So if you go to a conference, say anybody using Islamic finance or non-interest finance, there are no hands up because they didn't even do anything, right? And so they didn't even understand, right? Say again, I agree. I'm coming back to trust after now. Yeah, there should be better public awareness, public education. Is that somebody blamed non-interest financial institutions for not putting enough money in media. So yeah, I think a lot more budget needs to go in there, not just from Trust After, but from other non-interest financial institutions. A lot of money needs to go into public education. It has to be a constant thing, in fact. So NIFIAN now, I've created a new office on publicity secretary's role so that I can work more with the media and pump information, into all of these entities, right? Again, just information, also money, right? That's going to help fuel that expected growth, right? In banking, again, yes, ethical finance. We need to provide value. I mean, is that not to say, oh, don't go and buy a car using conventional finance. I'm going to buy a car from non-interest bank, right? I'm going to buy the car for you as a non-interest bank. To see the value that non-interest banking is bringing to the table. It's not just about the fact that it's faith-based. What value, what extra benefit comes to me? Is it reduced pricing? Yes, it's specialized. Yes, I'm going to get the pleasure of Allah and all of that, right? But what extra value does it give to me?
Thank you so much for that response, Dr. Bashir. So, let's talk about digitalization. We're seeing global Islamic fintechs using digital tools to reach the unbanked and underserved communities. How is, the NIFI, the non-interest finance institutions, leveraging technology to innovate within the non-interest model, especially to attract young people and SMEs in Nigeria?
So important, storytelling. We need to
Yeah,
tell, if you like, cases. We need to show, we need to relate our stories, of how
yeah,
we have built entrepreneurs, how we have touched lives of
mm,
households, again, benefit to people, right? And,
yeah,
and not to take too much time, we need to leverage on technology. I don't want to mention names. I see the way the fintech companies are going, the digital banks, they don't have an office anywhere. Nobody knows where the mighty building is. It's not Marina, it's not,
yeah,
but
yeah.
these guys control the market in terms of the
Mm,
number of people that use them. You want to buy something in a restaurant, they're giving you this account. You want to buy
mm,
fuel, so we need to attract that parts, the people at the lower, at bottom of the pyramid, the students, we need to attract women. We need to have mobile apps that are functional, you
mm,
know. Can you imagine in this time, sometimes internet banking, just internet banking, or
yeah.
non-interest banking is not effective, and they
Mm,
get frustrated. I'm like, hey, so why am I using this? I want to just transfer
yeah.
this money to another company. Why is it taking me so long? Islamic
Right.
collaboration, data analytics,
Mm,
I'm going to have all sort of virtual malls, I can see the conventional banks trying to do that too.
yeah.
We need to control that market, of course, regulatory role has been fantastic, I must confess. They've come up with tailored regulations already. Tax neutrality policy has been done. Public-private awareness. There's a part of platforms. So Islamic financial institution needs to create platforms that can allow also to be built upon.
Yeah.
Just my there.
Okay. Fantastic. So let's talk about regulators. What role are regulators playing in helping expand the frontiers of non-interest finance? And what more would you like to see from, the policymakers help do in supporting the growth of this sector?
I'll start by saying that Nigeria has the most regulation, one of the most regulation in terms of Islamic finance globally, right? So way back 2009, Nigeria started to consciously, right, started to put in place regulation, right, by bringing all the parties together, something that looks like an embedded autonomy. What I mean by that is, you have a group of people that can implement things, right, well knowledgeable, right, and then of course where there are capacity gaps, they built them within a very short period. So you had the likes of CBN, SEC, NICOM, all of these guys, together with the market operators. Very few of them at that time. There's about 3 operators at that time. So I'll probably not mention their names, right? And so they came together to say, hey, what do we need? How did they do it in Western Europe? You won't believe it. A lot of European countries have sound regulation in place already. How did they do it? UK, particularly in Luxembourg, how did they do it? Now, how did they do it in Malaysia? Why did Malaysia move so quickly?
Yeah.
Malaysia is developing their strategic growth, right, in the early 80s, right? Their development plan in the 80s. At that time, they had a GDP bigger than the bulk of the Far Eastern countries at that time. And so they created what you call an integral economic model. They picked the best of economic models from everywhere, right? And because it's a state-driven, initiative, it then meant that, all the state, the government supported the regulation so well, so it can
Mm,
work effectively in the market, so the market can survive well. But they did that in the 80s, of course, if you then look at my best case, the case of course, you like Japan to a very large extent way back then, they use a state-led approach in their development. So coming back to this question specifically, it's just until 2009 that we started to put together all of this thing. But again,
mm,
the places have done very well. They put together all the guidelines that are needed. And, because of public over scrutiny, if you like, right? Most of these regulations, when they did not come out quietly rather than publicly, if the central bank releasing a regulation now, they're not going to put it all over the pages of the newspaper. They're just going to release to the banks quietly, and people implement them. So there have been loads of tailored regulation, right? Can be better. I talked about tax neutrality earlier on. That was the first thing we did in 2009, 2010. They worked with FIRS to look at, if you're buying a property, should you pay double governance consent under Islamic finance? I said, no, let's look at what happened in the UK. How did they do it? The market had to work with regulators to start to look at the more complex areas. First, simple transactions, your regular Muraba, your regular Ijara. More recently, market stroke regulators are then looking at more complex issues, like I mentioned, like repo, like short-term liquidity instruments, which is a global challenge, I must confess, a global challenge. But in the case of Malaysia, they've been able to perfect the Tawaruk model so much or so well. Tawaruk is a reversed Muraba. They perfected it so much that they use it for everything. You want to buy a phone, you go to the bank, they give you money, they do Tawaruk back end. You want to buy a car, they do Tawaruk back end. So, in our own case, regulators are trying to see what's the culture of the environment. So I can easily get a credit card in the UK that is Sharia compliant, right? That's because they use credit card a lot. You must have credit records, right? In Nigeria, are we going to have credit card on the back of Tawaruk? Maybe, maybe not. How difficult is it to create? If you feel that's not a low hanging fruit, then we'll do the basic thing. So again, another very important thing now is for regulators to then start to push SDG commitments, right? If you like, give incentives. So if I'm going to do a sukuk or a fund or a CP, a commercial paper, that is rated to the overall concept of the SDG, can I get other incentives or benefits for doing that? And again, I must confess, there's a program coming up next month, organized by the regulators. We want to go deep into the realities of our system, of our country, and see what new regulation needs to come out beyond the basic, beyond the ordinary. And what that then means is that we're going to have to drive Africa in this campaign, right? We're going to drive Africa. We're going to be the one to teach Africa, Islamic finance, practical Islamic finance. And of course, that means that it must conveniently work in our system first. So I think a lot is done in that space, and we're not doing very badly. If no regulation comes out today, Rama, if no regulation comes out today in Nigeria has sufficient regulation to take it for the next, I don't know, to take the market for the next, I don't know, maybe 20 years, if I'm not exaggerating.
Yeah, absolutely. Thank you so much for that, Dr. Basheer. Let's, talk about the growth trajectory. If we fast forward, 5 to 10 years, you as the NIFIAN president, what's your vision for non-interest finance in Nigeria? What would a fully mature, inclusive, and competitive non-interest financial ecosystem look like? And what steps must we take to get there?
Okay, so I can break it down into several categories: products, process, people, technology, regulation, right? We talk about regulation, right? Product first. Can we make the product, how can it be easy for product to get to the table, to be approved by the regulators? So if you have an Islamic banking and non-interest banking license today, is it going to spend another year or two trying to get a product on the table, right? And so we thought, let's standardize the product, at least the basic product, get them standardized. Just in the case of Pakistan, so Bank of Pakistan standardized their products, their contract, the basic contract. If I want to buy a phone, I want to buy a house, I want to buy a car, I want to, do those basic things, those basic transactions, I want to do LC, all of those basic stuff. We think that, you should get a license and just align with existing contracts, right? That way you have 5, 7, 10 contracts you can work with on day one, and you can start to build value on top of those contracts. That's number one. Number two, we think that in the PFA space, pension space, can you imagine we have 100 billion when the conventional 100 billion naira, when the conventional one is at more than 25 trillion naira. So just imagine that. So it means, again, people don't trust the conventional one so well, and even the Islamic one, the non-Islamic one, they still don't trust it. So we need to find a way to have unique PFAs that the markets trust. So everybody can move their money to Fund 6 very quickly. That sector needs to grow. In fact, I think that sector is going to be bigger than the banking space and the Sukuk space put together. If conventional is dealing with over 25 trillion, right, and the Sukuk size that we have today in Nigeria is just at 2.3 trillion, thereabouts. No, they're not even up to that. It's about 1.3 trillion, right? Naira. It means that pension alone can expand, can blow up the markets and very quickly, right? So it means a lot of energy needs to go into that space. So again, as NIFIAN president, working together with my team members, we thought that we should put a lot of eagle eye on that side, a lot of eyes, and then see how we can blow up that space. Rather than talk about Sukuk all the time. Again, to cook, what's the size? Less than 2 billion, less than 2 trillion, right? So that space needs attention. I mean, Takaful is interesting, but in more advanced economies, the insurance companies are larger than the banks because you must have it. You cannot buy a property in the UK if you're not paying your insurance premium on day one. If you buy a car, if you buy a car and put it in your garage and lock it up, and you don't have car insurance, they're gonna pick up a car from wherever it is.
Wow.
Just even lock it up in your bedroom, they're gonna pick it up, right? And so it means you must have insurance. So that insurance, even though of course in Nigeria, insurance is tiny, that's what Islamic insurance or Takaful now is even more tiny, right? So again, one of the things we're looking at is to do a completely new business case, tear apart whatever Takaful model that we have, and then restructure it completely. But our instrument is not tradable. How can we make it more tradable? Right. So those are the line items we need to sort out to achieve that 100% growth within the next 10 years or 5 years, just like the global market, right? Massive growth, right? Again, the green and the green space, the MSME space. I think we've not done a lot there. Housing. I have a passion for real estate, I must confess, right? Housing, we've done nothing. I'm happy that we're having new funds come up now. I won't give details at this time, but this new fund will address some of those concerns, right? New housing funds, right? We think that if we consistently attack them, more importantly, ability to refinance. Again, our Sharia scholars will stop us from using those words, to replace, conventional assets, right? An asset, how can we replace it? If you like, clean it up with Sharia compliant funds, right? So we must be able to heavily take monies, either direct foreign investment, direct foreign portfolios, and use them to acquire assets already in the markets. These specifics needs to be done. And those initiatives must come, of course, from NIFIAN. Say, hey, members, these are the things we need to do beyond, you want to build 100 units of houses, I'm going to give you money to do it. You want to buy, 40 cars for the house of assembly, I'm going to give you money to do it. Those are just the basics, right? So the growth that we want to see, we need to look at those things I've talked about right now and build a whole new strategy around them, right? That we can, of course, within the next 5 years, we can be a lot better we can be in a better position than where we are right now.
Yeah, absolutely. Thank you so much for that, Dr. Basheer. It's always a delight to have you on the show because we never, go out of the show the same. It's definitely, bunch of knowledge and all of that. So we appreciate you. Thank you so much, Dr. Basheer, for coming on the show.
A pleasure. Thank you very much, Rahma. Say Mohammed.
Thank you, sir. That was a fantastic and enlightening conversation with Dr. Basheer Oshodi, the CEO of Trust Arthur, also the president of NIFIAN. We've heard how, the non-interest finance space started, the challenges, where we're headed, and what it might take to get there, the awareness gap, and the concerns around the awareness of non-interest finance. Well, with that, I say, don't forget to keep the date with us next week on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching, and as always, I am Rahma Say Mohammed.